Welcome back. Just keep an eye out on a couple of these banking names. We have ICICI Bank, which has moved to the high point of trade, and alongside that we have Axis Bank, which is doing well as well. But as promised, let's get chatting with the management of Jindal Stainless. They posted a weak set in the first quarter. The company posted a net loss, and there's also been a sharp slump in sales volume, understandably, because it was the lockdown and the company was not really functioning at optimum capacity. We have Anurag Mantri, the group CFO of the company, joining in now. Anurag, thanks a lot for joining in. Now the first quarter has gone by. You did very little in terms of volumes, 89,000 tons, etc. And we saw a sharp dip in your EBITDA per ton as well. Now, if you could give us a sense of what capacity utilization are you functioning at this quarter so far, what's the sort of volumes that you've done, and the outlook for this year in terms of volumes?
Yeah, so this quarter now, I think to our good surprise, the domestic first quarter we saw there was almost no domestic demand because of the multiple lockdowns at multiple levels, state and nationwide level. But to our surprise, then we saw a big jump in the domestic demand in quarter two, this quarter onwards. So this quarter we are expected to, on an average basis, to almost 85 to 90% of capacity utilization. In fact, September we expect to touch more than 90% capacity utilization. So we started July, we saw a good V-shaped recovery in overall stainless steel demand, and this is backed by some of the renewed new sectors, so like healthcare, which has come up really well, as well as the two-wheeler auto segment. The railway started continuing to take offtake. So some of the, besides the conventional segments of like construction and other activities, these really added a good V-shaped recovery in overall demand, and Q2 itself we are expected to have at least 85 to 90% utilization. With this outlook, what we believe is that even despite the lower Q1, overall basis we expect to turn out not more than 10 to 15% lower than the average volume, around 15% lower than the average volume. That's all on a full FY21 basis. Okay. So that looks a good V-shaped recovery, and we are happy that the kind of domestic demand is coming up, specifically the new sector like and the cold, few other sector like dairy, cold chain, these started which uses the large stainless steel parts have started seeing a good demand jump in our overall domestic segment.
Okay, all right. Two-part question then. Last year you did 920,000 in terms of volumes, approximately 900 or thereabouts. So 15% decline is what you're guiding us for. And also you said that domestic demand is rebounding. So could you give us a split in terms of what is the current sales mix of domestic and exports? I think in the first quarter it was nearly 30% was exports, or more than that was exports. So how has that shifted?
Yeah, so typically if you see most of the, on an average, our domestic export mix remains in the 80 to 80-20 range. So 20% export and 80% domestic. Quarter one, since domestic demand was not there, so we proactively tapped the export market, especially in the European Union and Russia, which helped us to take up the volume 33% in the overall mix. Now going forward, as I'm seeing now domestic demand recovering, obviously export overall will come down. It's not going to remain at 33% because we always want to cater more to the domestic market, specifically for to fulfill all the Atmanirbhar Bharat dream. Okay. So with this, we are still seeing at least should be back say 75-25 or maybe around between 20 to 25% export mix again on that range overall for FY21.
Right. Where do you make more margins, domestic or exports? And secondly, what sort of EBITDA per ton are you looking at for the remainder of this year? First quarter was just close to around 7,000 odd rupees, 7,200 odd rupees.
Yes. So EBITDA per ton guidance overall, what we believe is that it's as per our overall guidance is around should be somewhere between the 12,500 to 14,500 range. That's the EBITDA per ton range which should be expecting in FY21. I'm giving bit border range because still we need to see how the market starts panning it up, and it will be a function of volumes also. So as I said, on those basis, what kind of volume we are expecting, we should still be able to meet this range of 12,500 to 14,500 per ton. Now your other question was on the domestic margins versus export margin. Now this is actually depends on the sector to sector and the end uses of this. So our export is also to a very high-end market in Europe and US and Russia market. where some of these products are very high range. So we don't compete on prices on over there. It's on a quality.
Okay.
So it's a more balancing strategy for us. Similarly, in the domestic market also, we focus more on high-end applications.
Right. So, Mr. Mantri, what you're trying to tell us is there's no big difference in terms of EBITDA number, right? Whether it's domestic or exports. Is that what you're trying to?
I think you can say that.
Okay, all right. We got that bad. And you're guiding for an EBITDA per ton number bouncing back to 12,500. I think that's what most of the street will be working with as well. Quick question on your volumes. You said 15% decline. So just doing the math, it comes to around 7.8 lakh. Is that the number
so at least around as per our estimate around 7,75,000 ton volume we can clock in this entity.
Okay, all right. Quick question then in terms of the promoter putting more money, and you have a fund as well that's come in there, and they were looking to pump in around 165 crores, very approximately. What the street didn't like was that in fact it was done at a sharp discount to the market price as on that day. Give us a couple of details now. I understand that you all were pumping in this money to help the liquidity of the company. But if it's a warrant, then you all will be putting only 33% upfront, right? So when does the full money come in? This full 160 crores, how soon does it come into your books?
Yeah, I think so. If I understand, you have two questions. One is that whether it was a discount to the market price. I think, let me tell you, it was completely based on the SEBI formula.
Okay.
Of the past 12 weeks prices. It so happened that suddenly last 2-3 days the prices jumped up.
Got it.
With that, but that's really not really the benchmark. I think what could be seen is the intent at this moment, rather than taking new debt to fight this COVID-related cash flow issues.
Yeah.
The promoters and funds are putting their cash at this stage and trying to strengthen, because our focus, as you were saying, last 2 years has been completely on the balance sheet health.
Correct.
So we have been continuously deleveraging. What has happened during this lockdown, we took certain moratorium. The estimated loan reduction may not be in line with what we were anticipating at the beginning of the year. So there was a decision to pump in the more equity so that our ratios and the balance sheet remains in a good health.
Okay.
As per SEBI guideline, only minimum 25% was what is required to be pumped immediately.
Okay.
But it was 33% we are pumping, and the balance amount promoter are and this fund they will be bringing within the SEBI timeline of next 1 year.
All right. If you could tell us something, you said that you won't be able to reduce the debt this year as you had guided for. Last debt was close to around 3,500 in terms of the net debt figure. What is your plan to delever by the end of this year? And tell me a little more about your balance sheet strengthening program. How are you looking to delever?
See, if you recall, last time I said that we have been paying in last if you see almost 500 to 600 crore every year since almost. So last 2 years we have paid almost 1,400 crore of debt. Now this year also the initial plan was close to 550 crore. Now I'm saying with all this happening, I think probably it may not be 550 crore, but still we plan to deleverage by another 350 to 400 crore.
So you will reduce debt by 350 to 400 crore this year?
Yes. So I'm saying it may not be anticipated in our expectation. Our initial target was to reduce the debt by another 550 crore, which may not be possible because of all these COVID-related and the first quarter washout.
So Mr. Mantri, by the end of this year, sir, your debt will come down to around 3,100 crores approximately. That's the target as of now, right?
Right.
Is that correct, sir? 3,100 crores? Okay.
Yes.
Very quickly, sir, out of your total product mix, you have always been telling us that imports are coming in and they're really, making things very difficult for the domestic players. The government has put various duties now. How much of those duties that have been put protect some part of your portfolio? If you could tell us how much of your portfolio is protected right now, and also is there any kind of duty increase that's in the offing?
See, currently the DGTR has issued a notification which is for the Finance Ministry approval, which is, so right now there is no, it's not being fully implemented, but I think this was based on the specific findings and the data based on the injury being caused to the domestic players. Now we hope that this will soon be implemented to bring a level playing field to the domestic manufacturer. If you see the last few years, some of the large besides us, there were multiple domestic stainless steel players, including MSME sector, which were actually really struggling with the great financial difficulty. Hopefully, this should bring some level playing field to revive these industry and bring again restart the employment regeneration to the Indian manufacturing process. So overall, I think still we need to get the full. We need to wait and watch how the finance
Right.
ministry finally approves this. But I think
All right.
overall it should bring the level playing field at least, and remove the kind of injuries and the subsidies which were being granted in the other countries.
Fair point, Mr. Mantri. Thanks a lot for stopping by and giving us all those details. Wish you good luck for the remainder of this year. With that, we'll slip into a short break, but